Chinese technology companies are flocking to the U.S. for IPOs once again. More than 30 Chinese tech companies raised more than $10 billion on Wall Street in the first half of the year, and another 30 or more are expected in the next 6 months.
Many of these companies received early funding in their early stages from US dollar investors or from US dollar private equity funds. These private equity funds are seeking an exit, and that exit will be better expressed if these companies go public in the US.
The boom of Chinese tech IPOs in the US is driven by a desire to tap the deep pools of liquidity available there. Shou says many Chinese tech firms have managed to secure relatively elevated valuations in the US market. The IPO regulations there are also resulting in the current cluster of flotations on the US exchanges.
Obviously, many of them are relying on the 2020 annual reports to be included in their prospectus, and they have a grace period of roughly 9 months, meaning they need to submit the IPO within 9 months. Otherwise, they will have to prepare the first half semi-annual report in order to supplement the prospectus.
The relative attractiveness of the U.S. market has also been increased by recently tightened criteria for listing in China. In fact, more than 90 companies have withdrawn IPO application in China this year.
Regulators are paying more attention to IPO applications and requiring stricter information disclosure. They are also spot-checking some of the IPO candidates. The revised securities law has an increased emphasis on protecting the interests of small and individual investors.
The number and scrutiny of listing hearings in China have increased, and the new law levies tougher penalties for any market violations. In Money Talks.